Hello, I'm Mike Hughes, business editor of the Northern Echo, standing in for Graham Robb today. Welcome to the North East Shadow MPC, a partnership between Clive, Owen LLP and the Northern Echo. The former Bank of England Deputy Governor, Sir Charlie Bean, has warned that a rapid interest rate hike is inevitable to get on top of inflation. The rate of inflation within the UK is currently running at 5.4%, with some experts suggesting it could rise to 7%. This is the highest rate in nearly 3 decades. So I'm particularly interested to hear from our Shadow MPC members who in November narrowly voted for a small rise in the interest rate. After the discussion, we'll have a show of hands as the Shadow MPC members vote for an increase or a decrease, or would they prefer rates to remain at 0.25%. Let's talk to our experts. Nicola, Clive, Owen, how have things been for you there since the last MPC? What's your thinking at the moment?
Hello, Mike. Thinking at the moment, the clients, we're an accountancy practice, so we have a lot of clients, so we get a lot of feedback from them. They've started this year with a lot of COVID illness, and I think they've got over that now, and they're a little bit more positive. But the big thing I think's to come is the national insurance rise, and I think that will happen. But there's a double whammy on that because an employer has an increase of 1.25% on all of the staff's national insurance, as well as the staff. Obviously, they've got their 1.25% increase as well, and then if those employers are paying dividends, another 1.25%. So I think that's going to put a squeeze on the businesses that are already struggling to get parts. They're struggling to get machinery. Everything's going up in price, like the electricity, and there'll be a big pressure to increase wages because of this national insurance hike, that they're already increasing them because of their own employers' national insurance. So I think that's the worry to come. Yeah,
of course, the government's line will be that we need to start paying the bill for what's gone on. So people need to dig deep, and they're saying you've got to pay this, you need to pay that. It's sort of our responsibility. Do we feel that's all right?
The head is saying exactly the same thing, Mike. Yeah, we've got to get this money. We've got to balance the books, haven't we? And we want money to go into the National Health Service. We know how hard they work and how they need more money, and that's what it's earmarked for. But it's going to cause a lot of pressure.
Yeah, absolutely. Nigel, maybe I can turn to you and sort of give us an idea of how things are there over at BTS as an employer. You're sort of facing, as Nicola was saying, the NI increase as well. How are things looking for you at the moment? Are you confident, happy, or a little bit disgruntled?
I think a little bit apprehensive would be the correct terminology. In regards to BTS, the order book is as healthy as we've seen here for 3 to 4 years. So there's plenty of work out there. Definite squeeze on the margin due to the energy increase, and of course the majority of our raw materials is aluminium, galv, steel, which is having a real impact on the margin. But a lot of work out there, a lot of things going on in regards to new buildings. So we're quite confident about the future and the order book, especially for the next 18 months. The NI increase is definitely a worry. Again, adding additional cost in, which our customers, as most customers are, don't really want to have passed on.
Sure.
So we're having to look at how we pay for that internally by improving what we do to offset that additional overhead. And the rate increase, I think it's inevitable. I don't think the economy can continue to see the inflation grow as it is, and I think there's got to be some action taken quite quickly.
Yeah, I think you're right. Carl, what the thinking now is that perhaps if there is an interest rate increase, that it could be the first of several, that this needs to be a sort of staged bringing back of a sort of a certain amount of a rebalancing. Do you feel that's the case at Active?
Yeah, I think so, and I think it's not just in the UK either. I think the one thing that's different this time is we've set the precedent in actually, I think, being the first major economy to increase rates. Normally it's the Americans that do it first and others follow. So it's strange that we've done that to start with. But what we've heard and what when we listen to our economists and fund managers, the difference this time, which makes me a little apprehensive about, as Nigel says, the inevitable interest rate rises that we're going to get, is this feels like a different type of inflation this time. This is based on supply chain issues and the usual attempt to increase rates to curb demand. You know, the supply chain issues at the moment are worldwide, and a lot of orders, probably like Nigel in terms of fabrication and putting buildings up, the orders have already been placed for things that are going to be delivered in a year, 2 years' time. So putting 0.5% on interest rates over the next few months isn't going to help the microchip shortage in Taiwan. Sure. It's not going to stop the cars being delivered that people have ordered that are due for delivery in the next 6 to 12 months. So I don't think it's necessarily going to have the immediate impact that it would normally have if it was normal inflation, if that's a correct phrase to use. Yeah,
so maybe, as we were saying, that there might be at least the first of a string of them. Maybe it goes up 0.5% today, and then another few and another few. It's a thinking. It's not a short-term fix by any means, is it? This is a long battle we're in.
It is, and there are consequences, and we're already feeling it a little bit. We may be slightly different to others on the call today. Looking after clients' money, by virtue of putting up a small amount just before Christmas, it strengthened the pound. It then meant overseas holdings were devalued, let's say, on people's portfolios, and stock markets have actually taken a bit of a hit over the last 6 weeks. So we've already seen the impact of what a small rise could do, and my fear is if they try and do it too quickly and it doesn't have the desired effect, it might actually have the opposite effect in denting people's confidence and obviously fund values, etc.
Yeah, it's interesting times. Martin at Latimer Hinks, do you feel is there a sort of an inevitability about what's going to happen?
I think there is an inevitability, but I was listening very raptly to what Carl was saying there. I think it's entirely true that the inflationary pressures aren't the sort of inflationary pressures that we're used to seeing. There's all sorts of contributory factors here, and whether or not the normal mechanisms are going to work, remains to be seen. But I think that there are inflationary pressures globally. I think certainly in the States as well as in Europe, and I think there is only one direction of travel at the moment. In our business, we deal with private client work, which really just isn't affected by this sort of thing. But the property side of our business, all of the property work, obviously is very much affected by what's happening with the mortgage rates. Excuse me. And obviously interest rate rises will kick through. But there, at the moment, we hope they're going to be measured and relatively small. And bearing in mind we're starting from such a low base, I don't know whether there's any cause to think immediately that the property market is going to be thrown into some sort of seizure as a result of this, or we're going to have problems. So I think there is room, certainly for mortgage rates to rise slightly without it having too adverse an impact on the property market.
Yeah, you see a way forward. You see, it's not that we're coming up against a brick wall, that obviously there's going to be several stages to go through, but you see a way forward, yeah?
Definitely, yeah.
Okay. Jonathan?
Well, we can't expect to live with the sort of mortgage rates that we've had for the last 10, 15 years.
Sure.
Yeah,
the bills have to be paid at some stage, I suppose. Jonathan, what's your take on things at the moment? Are you echoing that sort of the inevitability, but a feeling that we're in control, we know what needs to be done, and we've got to buckle down and do it?
Yeah, I think so. I mean, it is inevitable that the interest rate is going to have to rise, obviously going on from what others have said earlier on this call. I think one of the factors that is concerning certainly clients in the construction side at the moment is the abolishment of use of red diesel, which they're concerned about from the 1st of April.
Sure.
That is going to have a massive effect on certainly construction-related businesses. And, there's a lot of clients that are already saying that they're going to have to add between 15 and 20% to some of their pricing, just to really cater for that. So I think that will have an effect. And, again, it's just a case of, it's going to have to be staged, but the interest rate is going to have to rise over a prolonged period.
Yeah, it's interesting you mentioned that the red diesel. There just seem to be so many issues at the moment that people are going to have to come to terms with. There's price rises and national insurance, things like diesel and that sort of thing. There's a lot on people's plates at the moment. Are people feeling a little overwhelmed, the people you're working with there?
Yeah, I mean, it obviously goes back to Nicola's comment about the NI increase potentially as well. I think businesses feel that they are getting increases. I mean, from our point of view, from an insurance point of view, insurers have always taken the premiums and invested them in the market, which they haven't been getting the return. And as Carl mentioned earlier, certainly the last 6 to 8 weeks has been pretty difficult for that. So insurers are, coming to us and looking for, as their starting place is looking for increases. Even where a risk has run extremely well, they'll start and look for an increase as their initial gambit. So it's causing us a lot of work in order to reduce that on behalf of our clients and ensure we get the best deal for them.
Yeah, absolutely. Chris Donaby and Naylor's Gavin Black. Let's look at the commercial property sort of side of things. How's the market looking at the moment? Is there an impetus? Are people wanting still to be buying the big commercial spaces?
Yeah, I think investor-wise, commercial property, and depending what sector you invest in, there's still a lot of attraction around commercial property. We've seen a lot of demand, interest, and confidence around rental growth in the industrial market, for example, on the back of e-commerce purchasing trends now. And that particular market is seeing a lot of projected rental growth. Will probably outstrip inflation over the next 12 months at least. So it depends on the sector you're investing in, but there's certainly that interest in certain commercial areas, and investors are always aligned to what's happening in particular markets. Yeah. But acting as we do for landlords and for occupiers, things like higher energy costs, general inflationary pressures. Tenants don't just pay rent; they pay service charge, they pay utilities costs. Sure. So they all have a squeeze, and everyone's got a mind's eye on that at the moment. But also developers, it's material shortages, rising costs, delivery delays. They all have an impact on viability of development. So they are things that our clients are looking at the moment with interest.
Yeah, absolutely. I'm just intrigued while we've got you on about the commercial property side of things. Are you seeing interest from small and large people wanting smaller and larger spaces? Is that the smaller firms still wanting to get more space for themselves, or is it mainly the bigger firms that are looking for warehousing, that sort of thing?
Well, I think there's been some big announcements, investments, occupier activity in the commercial industrial sector, but that often leads to supply chain demand further down the track. Yeah. Without giving particular examples, but Amazon taking fulfillment centres does lead to supply chain going quite close by, and that has a positive knock-on effect. Yes.
Yeah, interesting. Paul, let's move to you from Serios Group. How are you finding things there? Are you is your sector in a comfortable place?
We're quite fortunate in that we're not dependent as much as some other businesses in terms of supply chain, because we predominantly provide consultancy services. And one of the other good things from our perspective is we do a lot of work in the energy space. So we're working with facilities management companies to help them drive down costs. Obviously, as the costs of fueling, heating and lighting these buildings increases, people are becoming more and more interested in how they can save money. So we've been doing things like fitting IoT sensors and building data analytics platforms off the back of that help people monitor their buildings in a more intelligent way.
Yeah. How do you see the future of the data sector there, Paul? Is it it's going to be needed more and more clearly as sort of things progress. Are you seeing that yourselves?
We definitely are. As I mentioned, we're dealing with facilities management organisations. We're in talks with some plastic manufacturing companies and also car manufacturing companies as well. Everyone's interested in sort of reducing their carbon footprint and driving their energy costs down, which is helping us greatly.
Yeah. Okay. Thanks for that. And we have a special guest joining us, Graham Robb, as we suggested earlier on, has been able to join us. Welcome, Graham. I'm obviously.
Thank you.
Apologies for sitting in your chair today.
Good to see you there. Good looking after it. I'm sure you'll be able to do it very well. It's
all ticking over nicely. We're just obviously getting a round robin of opinion there. That there's certainly a certain inevitability about what's going to happen. We've seen that the national insurance likely to go up, and obviously we think the interest rates will as well, because bills have to be paid, Graham. There's been an awful lot going out, and the government needs to start getting some back in. How are you feeling about it all yourself? Again, that inevitability?
Well, yeah, I do. Look, this is my reason for inevitability. 3 ready meals from Marks and Spencer's. A few weeks ago, £7. Now £2.85 each. And they're very nice, by the way. Hen pasta, tuna pasta bake, etc.
Nice.
But look, they've gone up by more than 20%. And we've got to get a grip on inflation. I think inflation, I'm old enough to remember the 70s. I see a few faces on that could remember the 70s. And we cannot allow inflation to become the thief of your savings or steal and destroy jobs. If you have savings in the bank, if you have £50,000 savings, inflation at 5% is going to take £2,500 off it in a year. It's just ridiculous. We've got to get a grip of inflation, and that might mean the government will have to pay more in interest rate servicing, but it will have to do that anyway because lots of its borrowing is linked to inflation. But we can't have food in the shops going up at this level because the poor are hurt most.
Yeah, and as a business owner yourself, Graham, you're a victim of these inflation, these sort of soaring costs. So you are at the cutting edge of that. You appreciate you're a victim of it, but you see why what's happening.
It's energy, it's staff wages,
yeah.
It will be taxation, and it will be things like charges for the rates will go up, the business rates and things like that. So it will hit the business all around. But it's necessary to sort of, I think, for colleagues on the Shadow MPC now to step back from just their own business and look at the holistic economy. And it might be necessary, in my view, to increase interest rates a bit more than these tentative little baby steps. Do it decisively, send a little bit of a shock through the system to say that the Bank of England is now serious about inflation, and then it's going to have something to step back from.
Yeah. Interesting point. Carl, what do we think we need to be? We were talking a little bit earlier on about whether this was going to be the first of a series of increases, or, as Graham's suggesting, should we go bold now?
I do understand the sentiment of, action needs to be taken, something needs to be done. I think I think we're all fully in agreement of that. I'm more cautious. Like I say, my fear is I don't think putting up interest rates is going to have the desired effect like it has done in previous times when this has occurred. And that is my biggest fear, because, like I say, if there's a damage to the pound and people's investments as a result, and if it doesn't then solve the problem, you've got another problem that you've got to deal with. So I'm slightly more cautious. I do agree that it's a shame. Hindsight's a wonderful thing, isn't it? It's a shame we didn't put up rates earlier, and then we would have had a bit of slack to play with already. But we're not in that position. So, it would have been good if they'd have creeped up, like I said, before now.
Yeah. Nicola, just sort of wrapping the conversation around, but the Prime Minister's been through a lot, has a lot on his plate. He's got Sue Gray's report was delivered today on another matter, of course. But do we feel sympathy for the government in having to make these changes? Do we think they've Are they that part of the problem, or are they the solution? Bit of both?
Bit of both, isn't it? It's up to them to find a solution, isn't it? And they are unprecedented times. We have had COVID, but we've had that on the back of Brexit. It's a bit like Carl said, everything's come at once. The inflation is worldwide, but it's also happening here. We're coming up from quite a low base. That's why we've got good percentage growth at the moment. But yeah, it's definitely in the government's hands, and the Bank of England and what they do with these interest rates, of course.
Sure. Before we move to be taking a vote, anybody got any other comments? This is your chance to have your say, to make your sort of statements before we have the show of hands. Is everybody feeling happy and content? Of course we're not. We're facing such challenges, and it is across the board, and it's why it's so fascinating to have such a wide range of people here. We can look into different sectors, and we can see what your reactions are, what your business plans and your strategies are. This is the chance to have your say, though. What are we going to do? Are we going to go for an increase? Or are we going to say, actually, against perhaps all the trends, it's time for a decrease? Or should things stay the same? Do we need a little bit more stability now? Or is it a matter, as we said earlier on, for goodness sake, let's grasp the nettle, let's start and move on with this? Simple show of hands. Graham, yes, do you want to say something?
I'm saying up, but I'm saying put it up. I would go more than quarter point. I would go half point or even 3/4 point. I think it needs to be decisive and impactful. And Carl and I respectfully slightly disagree on it, but that's where I am.
That's why we have these shadow MPCs, so we have that broad opinion. Okay, show of hands. Who thinks that the interest rate should go up? This could be the only one I need to do. Okay, those who think it should stay the same. Okay, and not surprisingly, perhaps nobody thinks this is the time to be cutting interest rates. So there's a little bit of a flavour there about perhaps let's just see that next stage. Let's see what we're going to be doing next time. But there is clearly a majority opinion there that this is the time to put up the interest rates, and whether, as Graham and Carl were discussing, whether that's a large step now, brace ourselves for that perhaps, or whether we just move up that next to 0.25% or whatever. We shall see shortly. That's been my first Shadow MPC. I found it absolutely fascinating to get so many different opinions. Shows just the breadth of experience across the region. I'd like to thank you all very much for your time. Thank you, Graham, for being able to make an appearance at the end of that. That was very much appreciated. Thank you all very much, and we'll speak again at the next time. Thank you.